So very recently I've done a major change to my entire portfolio kept with interactive brokers. However, my second biggest part of my portfolio is kept with trading 212. So I thought in today's video, I'm going to take you with me behind the scenes and show you which stocks I'm going to sell and which ones I'm going to buy more of. Right, so let's hop over to my phone over here. We can see at the bottom right, trading 212, which is honestly one of the nicest stockbroker experiences in line with Lightyear. I think those two for me are the nicest interfaces. You know, the likes of interactive brokers, which I use a lot, obviously, you know, the interface is nowhere near as nice. So let's open it up over here. Here you can see my total portfolio value, just around 5,500 euros. Now, as I said, my biggest part is actually with interactive brokers, but I started much later also with trading 212, but now I've been really increasing it over time as I really love the experience and the new feature that allows me to transfer my portfolio to another stockbroker, in this case to interactive brokers. So you would just click on portfolio transfers to outgoing and then you'll be able to do that. Unfortunately, this feature is still not yet available to me. The rollout process, when you click into this, you can see will be expected to be completed by 26th of April. So hopefully, fingers crossed, very soon. But knowing that makes me much more comfortable to buy more stocks with them, because as my portfolio grows later on, I can always transfer some parts of it, at least, maybe not all of it, but some of it to interactive brokers. But the experience is better. And of course, I have no commissions, right? Right now, when I buy my favorite ETF, the S&P 500 from State Street, I pay around €1.50 every time I buy it through interactive brokers. Here, I pay zero for it, which is obviously way nicer. And the experience is better. I just love it overall. So let's look into it, what I have over here. So these are my holdings. I already trimmed it quite a lot. I used to have way more. I consolidated a lot of the positions, but yes, you can see a number of them, and some of those I will definitely be selling today. Let's run through one by one. Starting off with Amazon. That's actually not a share that I bought myself, but actually I got it as a referral. So anytime any one of you signs up and opens a Trading 212 account with my referral link, which you find in the description down below, both you and I will get a bonus share. And that can range anywhere from 8 or 9 euros, I believe, at the cheapest. Usually it can be 15 euros or 20 euros, some of them up to 25, 50 euros, at the highest up to 100 euros. So it's really win-win. And yeah, really, why not? Nothing to lose. If you haven't signed up to them yet, definitely do it, at the very least for an amazing interface and of course a free share. So nothing to lose there. So yeah, I got this as a referral. In this case, let's sell it very quickly because I don't like it to clutter and take up space in my portfolio, and sell out of this. You can see no commission. That's amazing. I love it. Market order. It will be executed right away and boom, it's done. You can see confirmation of that. And what I love about it, automatically that will go into my funds, which accumulate interest, right? So if I wouldn't reinvest it, automatically it would now be over here in my funds. So if I go down here, free funds, I see all the money I have working for me, and I see, of course, the interest, right? On my euros, I'm getting 4.2% interest. On my US dollars, 5.1%. So that's really, really amazing. And I choose in the settings to sell in the native currency. So in case I have something in dollars, it will sell it in dollars, because by default, Trading 212 will sell it in your preferred currency. And if you own euros, it will sell and convert it into euros, but that way you have always an exchange fee. So I prefer to sell it in the native currency that I bought it in. And immediately the money that I got from the proceeds of my stock sales from Amazon, it will now be in my US dollar holdings, starting to accumulate interest for me, which is obviously amazing. Right, let's go down further. There's one more stock that I need to get rid of. That was another referral share, which I really don't want to own, Tesla. I mean, some people love it, but I'm not a big fan of it. You know, I wouldn't mind drive the car sometime, but as a shareholder, I'm not really interested in that company. When share price gets influenced by the CEO making certain tweets, either up or down, for me, it's just not a serious company that I can invest in as a long-term investor. So let's sell that. It's a tiny amount. Once again, referral share, which I got. So yeah, let's get rid of this. No commission, which is always nice. And these dollars immediately will go into my dollar account and start accumulating interest, which is lovely. Right, then we have only few companies left to get rid of. Now, the first one at the top is Apple. Now, I'm a big Apple fanboy. I own most of their products that I can. I love it. I've been using it for many years. I was invested for many years as well. But sadly, as you can see, I'm down a little bit. And honestly, Apple has really been on a little bit of a nosedive in recent times. As you know, they used to be the most valuable company in the world. However, they recently, since the beginning of the year, I believe, lost that spot to Microsoft. And honestly, it's so interesting. The topic of AI is super hot, right? A lot of companies are really booming based on that. Nvidia alone, right? How much money they're making, and the stock valuation went through the roof. The same with Microsoft. They've been very smartly investing into OpenAI, the team behind ChatGPT and other things. So they've been doing extremely well. However, Apple, think about it. What kind of AI did they really come up with? So far, nothing really. So I do believe they're onto something. They always take a little bit longer to release these things. So I think eventually we should be seeing some news, hopefully in summer when they release their new products and their updates to the new operating system, I believe they will come up with a huge statement around AI, and hopefully that will catapult the price forward. Otherwise, I'll be selling Apple. And just knowing that they will heavily invest into AI, I do believe I will see a little bit of a price appreciation in the coming months, this year for sure. But as soon as they do and I'm back in the green, I will definitely be exiting my position over here. Right, so let's move back and see what else do we have here. The next position I would talk about is Texas Instrument. Now, Texas Instrument is maybe a company not everyone is familiar with. Maybe you remember them from your childhood times in school when we had calculators. A lot of them came from Texas Instruments, and they're really famous for making chips, but not necessarily super advanced chips, but more like analog chips. Chips these days are in everything. Even toasters these days have chips, right? So a lot of chips are needed that are not super high tech like Nvidia or others. So these chips are more for the masses, and they've been doing a real excellent job in that. Obviously, I'm in the plus, which is nice, tiny amount. It's also a small amount invested, but still, I'm happy with this. And they also pay me a nice dividend yield of 3.13%. And to be honest, that dividend was also what attracted me to them in the first place. A nice dividend yield, 3.14%. Payout ratio seems to be in line, 71%. You don't want it too high. If it's more than 80, 90%, that's a bit concerning. In this case, it means they spend around 70% of their profits on the dividend, and the rest they can either reinvest into the business or do whatever they have to. But yeah, I think that's still a very normal ratio. What I really liked about it was the dividend growth rate of 12.81%. So that's really attractive. And as a dividend stock, I quite like it. And honestly, they have been doing not too bad when I look at the last 10 years compared to the S&P 500 in terms of total returns. Let me pull it up over here. You can see it actually outperformed the S&P. That's why I bought it in the first place. I really like that chart. I like the company, what they're doing. So I think overall, it still is a solid company. And yeah, definitely has a bright future ahead. It's just, for me, I'm starting to shift a little bit away from holding individual stocks, even dividend stocks, and really wanting to consolidate my position into the S&P 500. I used to own different companies, and for some, they do very well. Obviously, I did research them and so on, so I'm happy that they have and continue to outperform the S&P. But again, I don't know if that will continue for the next 5 or 10 years, right? Maybe by then new companies will come on board, or companies like Nvidia, Intel, and even OpenAI, who is supposed to come out with their own kind of chips very soon, will take over the entire share market. So I don't know, really, I have no idea and no crystal ball, and I don't want to take the risk. So in this way, I'll take my profits. I'm happy I had the position, but right now I think it's time for me to exit it. So let's do just that. Let's go ahead, click on sell over here. And once again, obviously, it pulls up all my positions. I could also just slide it over here if I wanted to sell less, put the value, put the shares, whatever you have. But I want to exit and close my position, basically. Review order, click on it. And obviously you want to sell when the markets are open. You could also sell when they're closed, and they will be triggered next day if it reopens. But usually I like to sell whenever they open. And you can see by the green little dot over here, markets are open. There's no commission. There's a tiny transaction fee. Not sure what is this 1 cent. But yeah, normally there isn't any. I'm not sure it's the same currency. But yeah, anyway, I don't know where that comes from. But usually it's 0 as well. But again, 1 cent, I have no issue with that. And yeah, if everything looks good, go ahead and click sell order. And boom, it will take a second. And there you go. Basically, those shares are now sold and I have the money in my account. That's what I wanted to do. And with this, we have one last position I want to sell before I want to make some purchases. So let's click into Microsoft. You can see over here, I'm nicely in the plus, 123 euros or 10% in terms of percentage. So that's really quite nice. And I actually only opened it recently, so I'm quite happy with that development. You can see the gray line over here is my entry position. When I bought it, it's at $377 and now it's at $409. When I bought it, already people say, oh my God, it's way too late. Why are you entering so late? But you can see, right? It's like houses. When did you ever remember houses getting cheaper? They only go one direction. And even it's already the most valuable company in the world, Microsoft. Who is to say that it can't go from here, right? Because they're still making so many smart strategic decisions and investments that I believe they're going to continue to ride a wave and further grow. But again, who knows, right? I'm happy to take my profits and reinvest it into something more passive. So yes, looking at it, everything looks good. Click on sell over here. That's the value I have right now. All my shares, review order. Here we have it. No commissions, no transaction fee, which again, I don't know where it came from before. Markets are open. Looks good. I'm happy with this. Click on sell order and boom, there you go. Actually, one thing I forgot to mention, the dividend yield is also very little, with only 0.72%. So for me as a dividend investor, which I was really going heavy in the past, it wasn't even really that attractive. He would really only invest for price appreciation, capital growth in a way, rather than dividends. Because, to make a really serious income on 0.72%, you have to have a lot of Microsoft shares in your portfolio. And now you see, I only have 2 positions left. Of course, Apple, as I said, I will still hold on until, around summer. I think once they come out with the announcements, I do believe that company will go up definitely. I still like Apple, right? Even if it takes another 2-3 years, it's a company I'm always happy to own. So however long it takes, no problem. But then we see one last company I haven't touched on. It's not actually a company, but my favorite ETF right now, the State Street S&P 500 distributing ETF. And yeah, I only recently opened a position in it. Previously, I used to have the VUSA or Vanguard S&P 500, but the State Street is now the cheapest S&P 500 ETF in Europe. I only pay 0.03% expense ratio. That's really, really attractive. On my Vanguard one, I used to pay 0.07. So I made a video about this and show you the difference over a number of years. It does add up, so I'm really happy with them. In fact, State Street S&P 500 in the US is actually the biggest S&P 500 in the world in terms of inflows, right? So State Street is a really solid player. They have been along the markets. When you talk about the S&P 500, people always quote the SPY. If you look up SPY, is the S&P 500 in the States managed by State Street. So really solid company. And yeah, you can see, of course, I invested not so long ago and I'm down a little bit, 2%. But honestly, I have zero problem with this. In fact, I'm really happy because now that I can buy it at a slightly cheaper price. And long term, we all know how the S&P 500 has performed. I've done a few videos about this in the past. I'm really long-term bullish about it. On average, it has returned anywhere from 8 to 9% year on year over the last 30 years. So you're really going to be in good hands over there. And when I look at my S&P holding in my interactive brokers account, that's actually been the highest gain so far for me. I'm really confident that I'm going to buy more of this. I actually buy it, as you can see at the top here, in London on the London Stock Exchange, and I buy it in US dollars. You could also buy the same ETF in euros, in Amsterdam, I believe, or even in Germany and Frankfurt. So there are different stock exchanges depending on which currency, but I transact mostly into dollars. I believe in the dollar mostly long term. London Stock Exchange is also very good for me. So yeah, it just works. But again, you have to find what works for you. So given that I just sold the stocks worth around $2,000, let's reinvest that money. Obviously, I don't want to just have it sitting around, even though I do get interest on it, 5% or something, which is higher than the dividends I got on any of those stocks. Still, I want to put the money to work, to generate me dividend, because yes, you still get some dividends from here. Right now, I'm getting around 1.4% in terms of dividends. And by the way, also instrument details, you can click into this to see actually where you're investing, right? So if you didn't see before, which currency and where it's located, always click into this to make sure you buy the right one, because sometimes these ticker symbols can be a little bit misleading. So make sure you really look into this. Right, so let's go ahead and reinvest the money that I just got from the sales of the other shares. So let's click into buy over here. And then from here, you can click either you want to buy a specific number of shares, but the beauty of trading 212, you can just buy fractional shares. And that's amazing, right? You don't have to buy a full share, because one full share is $500 right now, right? But let's say you want to invest only $100, you don't have that kind of money, well, then you just select the value. In this case, you would just select $100 over here, and that would be a fractional share. You can see 0.19 share instead of a whole share. So whatever works for you. In my case, obviously, I just sold around the equivalent of $2,000, so I definitely want to reinvest it. I already bought more shares this week previously, but that was a separate purchase. But this now, I just want to kind of swap my previous shares into the S&P 500 shares, if that makes sense. Of course, I could click also into here to see other currencies I could use, but obviously, since I buy in dollars, I want to use my dollars. Otherwise, if I would use my euros, it would then convert it, and it would charge me a 0.15% conversion fee. So no point. Let's keep my dollars, which anyways already get a nice interest. So I like keeping my dollars with trading 212, where I get 5.1%. So that's really nice. So let's use it for here. Review order. And once again, it's a market buy at $2,000. That's the amount of shares I'm going to get. Zero commissions, which I love. As I said, with interactive brokers, I would have around 1.5, which again, honestly, is not that bad, because you also get very good pricing and many other things and benefits. So as a percentage, $1.50 out of 2,000 is really nothing, actually. Still cheaper than many other brokers. So let's go ahead, send by order. Here you go. I bought those shares, love it. And you can see my investment just went up to 4,600. Unfortunately, there's still no way to display it in dollars, because actually I always bought it in dollars, but it knows my native home currency is euros. That's the account I opened it in. So for now, I cannot change it, unfortunately. At least I haven't found a way. But yeah, basically, that's my portfolio. So if I go out over here, you can see what it is now. So yeah, as simple as that. So there you go. Slowly, I'm really consolidating my positions, removing those I really don't want. In interactive brokers, I still have a few more individual dividend stocks, which I'm keeping because right now they're a little bit in the red. So I'm hoping for them to break even or be in the green until I sell them. But really long term, it's funny. I started off with some ETFs, then went to individual shares, now back into ETFs. And I really come to realize, it's really difficult to outperform the market long term. Now, as you saw, I did have some stocks in my portfolio that actually managed to outperform the market, but only I'm talking about a couple of years, right? For the next 10, 20 years, are those stocks going to be the winning stocks, still outperforming the S&P? I don't know, right? If I invest into market, into the S&P in my case, I'm going to bet on the winning horse, no matter what, right? If it's going to be tech, which is most likely going to be, I'm going to be benefiting from it. But if it shifts and it's going to be biotech or pharma, what have you, well, I'm still going to be benefiting by that, right? So I really want to be able to take a step back from this active investing and researching them and spending all my time on that, rather have my money working for me passively, and I'll just continue dollar cost average every single week. And that way I have more time to focus on revenue generating activities that I can basically earn more and then reinvest into stock investing. Because I see so many people, trying to outsmart the market, and they're researching all these things, spending hours and hours in forums trying to find the perfect stock. And in the end, you waste so much time that you could have spent into earning more and just, spending it on other things and obviously reinvesting into the market, for example. That's just my approach, but ultimately it has to work for you. If you enjoyed the process of researching and finding the winning stock, then all credit to you. If you're a full-time employee, a busy parent, then maybe such an approach might actually work better for you. But I'm really interested to hear from you. Which approach resonates with you and what are you doing? Let me know in the comments down below. Always happy to hear from you. I'll get back to every single one of you. Next up, check out this video over here. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao!